Hello and welcome to this week's episode of Damien's Midweek Markets, the show where I talk about what's driving investment markets and what to look out for in the days and weeks ahead. Now last week, if you remember, the market started to unravel slightly and we started to fall down and break key support levels on the way down. And the question was, would we respect the support levels we saw in the August of this year, and ultimately, if we broke through that, we'd be looking at some of the lows from earlier in the year and maybe back towards December 2018. But as it turned out, the market respected some of the levels I pointed out in my key technical analysis piece for 80/20 investor members in the last week. So to take the S&P 500, for example, we went down through 2,900. It's always a psychologically important level if it ends in a nice round number. So 2,900, we went through that and we went just below sort of 2890 before we found some support and the market started to bounce. Now, it wasn't a strong bounce. The market seems to be stuck in a kind of pause, trying to work out what's going to happen next. On the FTSE 100, we broke down far more aggressively, actually, and we went down to 7,100, a level I mentioned last week. We actually dipped below that, and we bounced off of around 7,000 and about 77, which again is another key level. So we found some support. And if we look into bond markets, for example, bonds started to dip in terms of their yields. So yields kept falling, which means their prices rallied. So bond investors made some good money in the last week. So where are we this week? Now, the S&P 500 is sitting smack bang in the middle of that 100-point range I pointed out last week. So we're looking at something like about 2,850 to around about 2,950 on the S&P 500. The FTSE 100 has stabilised, but is still well below that key 7,350 level that I mentioned, which seems to be a pivot for the market to bounce higher or lower. Now, the reason why markets found a bit of support, it wasn't necessarily any great news that came out, but it was because markets became slightly oversold. Now, there is something called a relative strength index out there, which is abbreviated to RSI. And what it does, it gives us sort of short-term momentum on price changes of particular stocks and indices. Now, the main thing to realise or focus on is that started to flash that the market was being oversold. So it was actually falling quite aggressively over a period of time. And so it was due a bounce, because that is inevitably what tends to happen. Equally, on the other side of the coin, if the market rallies too strongly, too bullish, you will get a pullback. It won't just go on forever. So we had a bit of a bounce, and like I said, we're now in a point of a bit of a pause to see what happens next. Of course, we still had weak economic data out of America. We had weak inflation data, but surprisingly weak. So the pressure on the Fed is mounting because, of course, on the one hand, they may want to cut interest rates to be able to boost economic growth. But if inflation is falling, that will start to hinder them. Interestingly, this week, we also had Jerome Powell from the US Federal Reserve have a press conference ahead of the release of some minutes from the previous month's meeting when they set the interest rate policy for America. Now, he started to mention that the Fed is about to launch an expansion of its balance sheet. Now, that sounds a hell of a lot like QE, quantitative easing. So that's also known as money printing to you and I. Now, that is what actually drove the stock markets around the world higher and higher over the last decade, alongside lower interest rates. Now, he was at great pains to say it wasn't QE. QE4 isn't about to arrive. But it sounds a lot like QE4. In fact, it looks a lot like QE4. So don't call it QE4, whatever you do, but it looks like the Fed is now about to dump a lot more money on markets. And of course, that should be really good news. Oddly, the stock market fell that day when he actually announced it. And part of the reason was because this seemed to unleash Donald Trump from his momentary silence to start to attack China again, because Trump has been wanting the Fed to cut rates and print money. He's been very vocal on Twitter, and they already are cutting interest rates, and the fact that they might be about to embark on a new round of QE seemed to give Donald Trump license to go on the offensive on the trade war again. So he took to Twitter. He actually, in fact, blocked 28 Chinese entities, the trade talks which were scheduled for this week are looking very dicey indeed and are hanging in the balance. So the market reacted by selling off again. So the stock market started to fall back to the lows we saw last week. Obviously bonds rose aggressively in price, so it was good for bond investors. So where we are in markets, again, we're pausing. We're trying to see what's going to happen in the trade war in the coming days. We're trying to see what the Fed might do at its October meeting. And of course, we've got Brexit in the background. Now, Brexit, we're in a similar limbo. At 1 minute, we have Boris Johnson telling everybody he's going to get a deal. Next minute, we're having him telling us we're going to crash out. And it's a similar narrative coming from the European Union. And it's causing the pound to be very volatile. Now, this has all meant that defensives have done pretty well. So that's bonds, defensive equities, REITs, utilities. They performed relatively well in the last week or so. So there was a dip at the beginning of September, if you remember, where defensive did poorly, but now they've rebounded. So it'll be interesting to see what happens with the trade war this week. It'll be interesting to see what happens with Brexit as we approach the end of October. And of course, at the end of October, we've got the US Federal Reserve next interest rate meeting. Are we going to get an interest rate cut, which the market is pricing in? Are we going to get more QE? Of course, the other thing we're about to get into is the company earnings season in the next couple of weeks. And the outlook for tech earnings is looking like it's going to be pretty poor. If that happens, then that could be a big headwind for stock markets generally. So that is it for this week on Damien's Midweek Markets. As usual, you can contact me via Damien at moneytothemasses.com, via Twitter at moneytothemasses with the number 2. Don't forget to follow us on YouTube, so hit that subscribe button. And of course, we've got a Facebook group, so don't forget you can join that and you can discuss anything you want regarding investments in there. Just search for Money to the Masses Community on Facebook.